Welcome to Brevester Temple Tree's weekly market update. We have gone through a very eventful week which was full of negative news flows. To begin with, Karnataka election outcome. What was uncertain before the elections became a confusion after the results got announced. Almost all the parties staking claim where they don't have majority with them, and as of today, the President Yediyurappa government has been asked to prove their majority on the floor on the 19th of May at 4 p.m. Probably this drama will bring out more challenges in the coming week. As the news about the floor test came about by the mid of Friday, markets started to jitter. The next news flow was currency hitting a new low of 68.11 towards the dollar. We have seen this after 2013 lows. 2013 we were at 68 and now we have breached it. This has happened because of reasons like good jobs data in the US, interest rate likely to strengthen in the US. Not only the US is strengthening the interest rates, even in India we have RBI has issued given information that interest rates will not go down from whatever levels it is now, and probably the bond markets have already factored in 2 to 3 interest rate hikes in India too. Probably it can be smaller percentages, while this is also putting pressure on the market. And along with this, the news that mutual fund SIPs have got reduced in April. The strengthening of dollar is bringing in flight of capital as FIIs are going to liquidate more from the emerging markets. Until recently, we used to talk about FII outflows are not being a concern for India, while now the SIPs going down has brought a new challenge. SIP book, which was around 1,800 crores in March 2016 or early 2016, went on its continuous growth path to reach around 7,100 crores in February 2018. Whatever the new investors have started to stop in SIPs is not a good sign, because in the period they came into the market in the last 2 years, markets was only going up. For SIPs, up market though will give positive gains on the every month SIP investments. Actual advantage of SIPs is when the market drops. In the last 2 years, apart from barring some 1 or 2 months where we had downswings, large part of the period the market was up. Now if they are stopping SIPs, they will actually lose the advantage of getting more number of units, because from here markets are not going to go to zero. It is not going to happen. Maybe there can be uncertainties in the next 2 or 3 months. After that it will start going up. At that time, units brought at the lower levels when markets were will bring high returns for the SIP investors. Actually, new investors who are stopping SIPs because their SIPs are going down are making a mistake. In fact, media is one of the reasons why this problem has started. As in the last 2 months, there have been reports in lots of newspapers and magazines that 1 year SIPs have become negative. It's actually not to be worried, because SIPs and equity investments are to be looked at for longer horizons, like 3-5+ years. Only then you can see big gains coming from it. In the short term, volatility will have an impact. Along with this, the other news was crude oil breaching $80. Again, this we have been talking about. Crude oil will not breach the $63 mark, because at 63 shale gas becomes attractive, while at this time when crude went up, US refrained from activating their shale gas facilities. This was because of some understanding that has been happening between the Saudi and US government to tackle Iran, where sanctions have been imposed. There is expectation that we will breach the $81 mark, and this crude oil price increase has brought about $50 billion increase in our import bills, along with currency hitting a low and crude oil price increase, which has brought huge pressure onto the forex reserves, because again RBI is also pumping in dollars to cool down dollar pressure. All this together has put a lot of pressure into the market. Market started sliding this week, and this was not a surprise because we were expecting a downtrend in the market, which has to reach some 32,000 or little lower than 32,000 on the SENSEX 2 for it to become attractive and move up again. Probably this might take 2 or 3 months time from here. Until that time, there is pain to be witnessed by investors, both old and new. For old investors, they would have already seen very good gains in the 2017 rally. So for them, this loss will not be a big deterrent. Whereas for new investors who have come into the market expecting big gains, will feel this pain more treacherous. But removing money out of the market is not a good action to do now. In fact, stay invested, and if there is money, start investing when market goes down. Result season have not been so very good. Good companies have been reporting very good numbers. One example was Bajaj Finance, which has been continuously giving good numbers, and recent quarter also has been with 61% rise in its profits. On the banking side, they have been depleting assets. 43,000 crores of losses declared in the 17-18 so far. Of the 89,000 crores stimulus that government had announced, 50% has gone out only on losses, and the valuation of banks have dropped beyond that. So these pains will remain in the market for 2 to 3 months. Stay invested, you will see good times coming probably end of 18. And 18-19 can be a flat year for the markets. Thank you.